maximizing your company tax deductions, yeah, understanding your company tax filing, etc., etc. Yeah, so I'm trying to touch on it on a high level, but giving you some case study approach so that you can understand it further. The take home, if you may have, yeah, we would like to see you taking home some important things that include the important understanding about the common issues, or should I say a common errors that is always being done by a taxpayer. Yeah, we wanted to pretty much touch on, let me see, about between 3 to 5 items for today. Yeah, and at the same time, how do you actually look into maximize your tax deductions? So in maximizing your tax deduction to us is actually be very important to look into, should I say, what is the rules of tax deduction to begin with? Yeah, so how do you actually look into the maximizing part of it? And number 3 is improve your documentation and manage your tax audit situation. To make it slightly light and easy today, towards the end, we also wanted to actually do a little exchange of role play by letting our audience today, if you are a tax agent, how will you actually make a decision on some of the cases, real life cases that we receive? Now, coming down to understand the common issues in tax deductions, yeah, there are 4 items that we wanted to look in today. 1, we talked about ownership of the asset. Number 2, we want to talk about the claims that was actually made by directors and employees. So what has actually happened in this space? It looks simple, but there are a lot of the time, the inner revenue, when they come to audit, these are the areas, simple, but area that they normally like to focus on. Number 3 is expenses that is required to pay withholding tax, but a lot of the time, taxpayers, you are not aware of it. And number 4, we wanted to just touch on a little bit about this thing called deemed interest income. It is not new. It's something since 2014, but we're going to touch on it because we believe that the current inner revenue approach is actually worth for us to look into this matter once again. So let's look into very quickly about our first discussion area. Ownership of asset. Let's look into the car. Scenario number 1, yeah, we talk about vehicles that is not registered under the company name, whereby the car registered maybe under director's name. Question, can I actually claim the capital allowance under the company? In the past, right, the directors may, for various reasons, having the car under their name, do a board resolution, do an assignment or whatever you call it to the company. The auditor, many of the times, may directly pick up that particular assets, okay, into the company's book and claim the capital and claim the depreciation accordingly. And as a tax agent, because it is a tax compliance work, it's not a tax audit work, a lot of the time we do rely on the auditor's presentation, and we would then apply the capital allowance treatment accordingly as well on the motor vehicle. Recently, we see that the inner revenue are going quite picky into this particular subject matter, to be honest, right? We have our case, we have cases that come to us whereby the inner revenue goes straight into the car registration card. Yeah, the registration card of the car. So by virtue of seeing that the car card is actually not under the company's name, they are actually questioning the capital allowance claims and so on and so forth, right? This is what we have seen. And to be very honest, real life case, we have actually went through an appeal, etc., and we're beginning to see it's not able to argue otherwise already. So the inner revenue are very particular over documents when it comes to little things like that. So ladies and gentlemen, if you actually have a car that is under these situations, you need to actually think carefully, what is your next step? Do you want to continue using the board resolution to do this and then let the auditor just to pick it up and then let the matter settle as it is? Okay. Or would you like to actually think that, okay, I may not actually pass the tax audit test. Okay. So as a result, I wanted to do a transfer of the car. You need to make your business decision pertaining to this matter. I know a lot of the time you don't do that is because of many reasons, including the insurance or the road tax that you got to actually pay on the road. And as a result, you have reluctant to do the change onto your car ownership. However, you need to do your check and balance today on what is actually is best suited for you. Okay. Now, second scenario when it comes to the assets is, yes, the car is actually registered under the company. However, my directors, okay, I am only an SMEs. I'm only an SMEs, okay? I don't have a lot of high-level executives. My company are mainly run by husband and wife, all right? But I have 5 cars that is sitting in my accounts book. If I register all the cars under the director's name, the EA form, the BIK of the director is going to look really, really huge. And I, as a finance person, I don't know how to talk to my directors over it. Can I just, in the event of audit, just let whatever that is on the car that was just disallowed in the tax com, okay, and settle with it? Can I use that as a way that not disclosing the benefit in kind of the company car to my directors? Because it may be multiple cars, right? The answer is also no, yeah, ladies and gentlemen. Number one, the benefit in kind is actually a totally different thing, okay? Your disclosure into that is relating to personal tax audit in many ways, okay? And then the disallowance of this item in the book, it doesn't actually save your PCB audit if there is any, it doesn't say. Yeah, your PCB audit will still need to be complete. Your EA form will still need to be complete when a benefit in kind required to be registered. Okay, so yeah, it's important for you to take note that it's not that, hey, I already add back here. Why are you still going to bark about the other things? No, actually, when it comes to company tax audit as well as PCB audit, actually being viewed totally differently. Okay, now let's move on to the next discussion area. Discussion area 2, I call it. The claims made by employees and employers. Okay, or we call it employee and directors. Okay, now, is the general ledger description plays an important role during tax audit, ladies and gentlemen? Yeah, is it important role? Actually, the tax authority will always request for a management account or GL when they are actually doing their tax audit onto you. During the MCO time, they may actually ask all the information sent through a Google Drive or whatever, a Palm Drive, whatever you call it, and send it over to them for them to actually digest it. Now, a lot of time, the taxpayer say, send lah, because I got nothing to hide. So when they send an item that look like this. Okay, so it is like food messing. Okay, and then everything is director. So, ladies and gentlemen, when an inland revenue officer, not being somebody that is actually sitting in your office day in, day out, know nothing about how your business is being run, know nothing about how your business is being run, by purely looking at a GL description that look like this, ladies and gentlemen, if you are an inland revenue officer, what do you expect an officer will interpret by looking at these transactions, right? And especially when they look at the director's form, yeah, they look at the company record, husband and wife, they look at the employee list, less than 10 people, all right? Then they look into the food messing, etc., etc. It is actually not easy to sit in your shoe and think from your point of view and agree that these are all relating to whether you call it staff refreshment or whether you call it entertainment claim, whatever it is. Okay, now I wanted to move you by looking at this GL, right? So to the next item we call entertainment expenses.